Good evening, everybody. This is Johnny Seville, and this is your executive summary for stock setups for Friday. And of course, we've had a great couple of days in the downward direction. S&P 500 has continued its open range bias to the downside, dropping back to some support levels here. As you can see, we are now at the 20-day simple moving average. So we've had a nice drop down from 2400 to 2364. So that's a 35-point drop essentially. And if we were going to see normal markets, we would expect to see some kind of a bounce here. However, I certainly wouldn't change to being bullish. I still think there's worse to come, and but we could expect some kind of a bounce at this point, maybe up to respect the 2380 resistance from the open range and down from there. But it certainly isn't looking good for the bulls right now. High yield bonds, which we've been talking about all week and last week, these have continued lower. And as you can see, very close to that target of 86 that we talked about. There's a 200-day moving average, so we're pretty much almost there. But the volume has been just getting bigger and bigger. 17 million, 17 million, 22 million, 21 million today. Like it's just and it's closing the bottom half of the range. Smart if the corporate America was in good shape and the smart money was buying corporate bonds, these should be going up. They're going in the opposite direction of where a healthy market would usually take them. And high yield bonds have almost always gone down before a major correction, so they've been a leading indicator. Of course, so too is the stocks above the 50-day moving average. This almost always drops ahead of the market dropping, and you can see it's been going straight down since January. So a couple of the key leading divergences are all giving us sell signals, and that's definitely something to be aware of. Some of the recent shorts have done exceptionally well. SLCA, which was an alert back on January 4th for the March $55 puts. Those have done extremely well if you're in those. We sent out another alert last week on Friday and if it dropped through $50, we would consider the June $55 puts, and those have almost doubled now as well. Certainly intraday, I think they're up from $5 and change to 980 by 1130, I think, is the bid-ask spread. So yeah, almost doubled at the moment, and of course that's just plummeted. So nothing wrong with taking a little bit of profit there, as we indicated in last night's email. Again, when you've doubled your money, especially if you've done it in a few days, nothing wrong with taking your original capital out and letting the profits run. HPP has moved really well today. This one's just kind of busted through its trend channel. Of course, that was a new short alert from last night, and Hilton also just seems to have rolled over as well and broken through its entry signal for a short criteria. So I'd definitely go back and have a look at some of those recent executive summaries if you missed any of that, because it is looking really good. Hilton, of course, is in the lodging space. Now, the hotel chains, Strath isn't necessarily willing to give up on yet, but we are starting to see some nice breakdowns in other travel-related companies. Some of like Delta Airlines was breaking down recently, and Extended Stay America, which is kind of the rent by owner type thing, that's also having a nice breakdown as well, and could be a possible short here. I'd be looking at this $17 as a stop criteria, and this could have a breakdown potential of a rising wedge, which I would again I'd use the conservative measurement a little bit further up. Again, you can see that would be a possible drop all the way down into the $13 range. So again, if we see a break below, say, 16.27, this could be a possible short. The other thing that I've been noticing is that real estate really seems to be rolling over. We had the Spider Dow Jones Global Real Estate ETF here has been building in an upward channel, and you can see that was looking bullish, like it wanted to break through the 200-day moving average, and instead it's just rolled straight over and has come crunching down through with expanding range candles and huge volume today. 239,000 shares traded yesterday, 217 the day before, 247 the day before that. Today, 2 million. So this is looking like it's time to start looking for shorts in the real estate related market. Um, and so things like KBH Homes are going to be things to be looking out for. I mean, these ones are still in breakout territory, but we're going to be wanting to look for the home builders and real estate related stocks that may have exposure to that kind of a drop. The one that I had on my watch list from last night was actually GFF Griffin Corp, and as you can see, we're either looking at a downward channel here, or we're looking at a declining or excuse me, a descending triangle. So either way, you can see there's nice divergence, and again, possible short from kind of around this 24 area and below. And I would, if we were using the measurement of the descending triangle, we would look at a breakdown like that, which would give us a $21.20 target. So from 24 down to 21.20, there's some money to be made there potentially. And I'll be looking at a stop criteria at 25.13. So basically, there's about $3.80 of reward for $1.13 of risk. So a reasonable risk-reward ratio there. Looking over into the long side, of course, we could very likely get a bounce. So we also want to be considering possible longs. And again, mostly looking at the flag setups here. IDXX was brought to our attention in trading room tonight. I like this from the flag standpoint. We got a nice flag up here, and a continuation of that flag would take us to 160. So there's only about $10 to be made here from about 150 up to 160. But I wanted to point it out to you. And again, I'd be looking at a very tight stop criteria. The low here of 146.42. I'd be looking at 145.32. So let's have a look. It's still not really great risk reward. $10 of risk for $5 of risk for $10 of reward. So I'd want to tighten that even further. I'd even say 146.23. 146.23. Looking at a target of 160, and I'd be looking for what's the high here? 149.57. Looking for a break above 149.73. Okay, and the other long that I found. Well, actually, it wasn't found by. This was also from a student in trading room tonight. So well done. Trading room was definitely exciting today. Prism. These guys have just been awarded a large payout, which, if paid out correctly, then that should value the stock at $1.60 or higher. And of course, we do have a nice looking flag formation here, which if we measure from the breakout point up, there you go, that gives us a target of 145 to 150. So that's right in line with what we were talking about. So I'd be looking for a breakout above this trend line. You're going to want to be watching it kind of in the intraday, because it's let's go to the hourly chart. There we go. So I'd want to see a break above this trend line. So you'd have to watch when it breaks that, if it breaks that, because you can see this downward channel here. So I'd be looking for essentially a break above 90 cents, but it could be lower. So watch for the trend line. But my best guess at this point would be it's going to be a break above about around this area, 88 to 90 cents, and I'd be looking for a target of 146. And at that point, I'd be looking at this kind of support line in as a stop criteria. So I'd be looking at about 74 cents as a stop. So it's obviously a bigger risk reward range, and so as quickly as that would go up, I would want to start protecting that with a stop loss. We'd want to raise that up to around 84 cents as quickly as possible. Now, what would be considered that? Probably once it breaks above this 95-cent resistance, rallies up, pulls back, either bounces off that trend line or bounces off that and makes a new high, and that's when the stop loss would kind of be a good time to consider raising it up. So there you have it. That is your executive summary for tonight. I hope you enjoy it, and I'll be seeing you all next week. Take care.